Hong Kong market, you can see, has just slipped into the red.
21,800 is now the 20-day moving average for the Nifty. And the 40-day exponential moving average stands at 21,618.
The Union Cabinet yesterday has allowed 100% FDI in the space sector.
Cabinet has gone ahead and hiked the fair and remunerative price, that is the FRP, for sugarcane.
CNBC now says that they have a sell on all the three oil marketing companies.
There was a tinge of green, now there's a tinge of red, but it's not very much at all.
Three themes that the government is pushing very aggressively on. One is renewable energy, the second is defense, and the third is aerospace.
They are now dictating that we will tell you what should be invested.
And the markets are at the day's low.
The crop is turning out to be much bigger.
This is the first of the 6 plants that the companies announced. This one's in Panipat.
World leaders and business honchos from across the world are jet-setting to Jamnagar for the pre-wedding celebration of Anant Ambani and Radhika Merchant.
And the banking index today, the banking index is the one that's under significant pressure.
Hello and welcome to Closing Bell. I'm Nigel D'Souza and joining me is Surbi as well as Rima. Well guys, you had a bit of a scare in the first half of trade, but what gave you hope was the broader markets were continuously outperforming. The mid-cap and the small-cap indices for majority of the trading session, they were trading in the green. And with that, had the Nifty as well that saw a bit of a recovery. The Nifty bank is still in the red, but it's recovered considerably from the low point of the day. So not such a bad outcome at around 2:30 p.m.
No, not at all. Actually, from the day's low, and the Nifty intraday low today was 21,875. So we didn't quite touch that 20-day moving average, which Prashant in the morning was talking about, which is 21,800. That's the 20-day moving average. The low today was 21,875. And from that level, we've seen a recovery of close to about 200 points. And the mid-caps too. When the Nifty was down close to about 150 points, the mid-cap index was absolutely flat. And as the Nifty is recovered, we've seen the mid-cap index also, gain considerable ground. So in the morning, it was flat at about 11 o'clock. Now it's up 0.7%. The advanced decline ratio is turned in favor of the gaining side. So it's a pretty good outcome, ex of the banks.
And guess which mid-caps are getting bought all over again?
CPS.
It is the PSU. So this is playing out like a tape, and a very similar sounding and looking tape. Remember when the last mid-cap shakeout happened a week back, not this Monday, but the Monday before, it was all about the sell-off in the PSU stocks. And one day later, the curve had turned, and the same story is playing out second time around. Because if you're seeing the mid-cap market, then the names that are up and about right now, there's NBCC, NMDC Steel, look at NALCO, look at NMDC itself. Of course, among the large cap names, look at Coal India, which has anyway seen a fair amount of price damage because of the other e-auction issue. BHEL is up and about. So basically, one point is that mid-caps are seeing good buying. The second point is that on the Nifty, while there's still a tussle going on the large bank side, and by that I mean, look at the fight between an ICICI bank, for instance, and an HDFC bank. HDFC bank is still sulking, not doing as well as the others. But you've got IT supporting today. So that sector rotation is ensuring that overall, we've not the ground hasn't caved in. And the recovery that we've seen has happened thanks to a lot of the IT names, some of the other stocks like L&T, etc. But all in all, I guess, as long as that churn happens, as long as Nigel would put it in his favorite cricketing parlance, if not the opening batsman, if the second or third or the middle order can come to the rescue, the Bulls would be happy.
And just keep giving the strike to the one that's in form, right? And that one will get you the runs. But just one more point I wanted to make. There's going to be a bit of a David versus Goliath that's going to play out, right? Between Grasim that's coming in versus Asian Paints. With this recovery that you're seeing in the markets, both of them as well have recovered from the low point of the day. So Grasim, you had a very positive statement that came out from Mr. Birla. He's talking about 10,000 crores of paints revenue and turning profitable. Asian Paints was under the weather earlier in the trading session because that's the one that's going to be challenged. Remember, they have limited headroom on gross margins. And if they make any additional gross margins, it's likely to go into ad spends as well. So that's why that's in a bit of a tricky situation. And that stock, in fact, from the day's low has seen a bit of recovery. If you pull up actually a split screen, you'll see both those two stocks have seen a good recovery in line with the markets. The Nifty as well, still mildly in the green.
But I just want to ask you, Nigel, now in this story, who's David, who's Goliath? Because Grasim is a new entrant, but looking at the money power and the muscle they have behind them, I'm just wondering eventually who will end up being who.
Yeah, so that's going to be the piece that we're going to put through, during the show. Whether David can be a challenger to Goliath. Now, it's your guess which one is going to be David and Goliath. But according to me, as of now, given it's the paints division and Asian Paints has 55% of the market, David this time around is going to be a Grasim and Goliath will be Asian Paints. We don't know how this story ends, but for the time being, it appears it's going to be a rather interesting contest because not just these two. You have the JSW Group, you have JK Cements, you have Pidilite. All of them, they want to capture some part of the market as well. But we've gone on with this, introduction chat. But let's find out, how do you trade the index in the final hour of trade? Nagraj Sethi of HDFC Security joins us on the show. Hi, Nagraj. If you bought the morning dip, you would be very, very happy. But what's the view from here on? Do you think that the markets have enough to go to that high that we saw yesterday, 22,250? We need to keep in mind that we're going to be playing out the weekly expiry as well in the next 60 minutes.
Hi, Nigel. Good afternoon. Rightly said, Nifty has witnessed an amazing intraday recovery from the lower levels. What I'm expecting is limited decline from the higher levels and more upside, because chartically you can see the formation of higher tops and bottoms itself is indicating that on every decline, this is going to be a buy and dips opportunity. At the lower levels, even though Nifty declines from the higher levels or from here onwards in the next 1 or 2 sessions, I think 21,850 odd levels is going to be a good support for the market, and eventually we are going to see the upside bounce, a decisive upside bounce, and the retest of the recent high made, which is around 22,250, 300 odd levels, new all times in the near term.
Okay, so 21,850 is an important support level for our markets. What would your stock recommendations be?
Yeah, I have 2 stock picks on the long side. First one is a data pattern. If you can see the long-term charts of data pattern, has been continuously in a range-bound action before showing a decisive upside breakout recently in the last 3-4 sessions. And the overall chart pattern is looking at decisive upside breakout of the range movement, as well as the volume has also expanded during upside breakout. Currently placed around 2,200 levels. One can buy it for the short-term gains of around 100, 120 points. 2320 could be the next target, and one can place a stop loss at 2160. The second stock is Hindustan Copper. Hindustan Copper was in a downtrend over the last 4-5 sessions. Recently made a higher bottom around 241, 42 levels. Currently trading around 261, 261.80. One can look to buy over here. The upside target would be around 278, and one can place a stop loss of around 252.
Okay, all right, got that. Thanks very much for giving us those calls, Nagaraj. We'll come back to you and ask some more questions and some more trades in a bit. Let's kick started. Then lots of stocks buzzing around today and pretty interesting news flow around them. We're kicking it off with ABB India, because what a move in the last 2 sessions. Remember, same time yesterday, we were tracking a 10% move on ABB after results yesterday. Now add another 8% to it. It's been quite phenomenal. And of course, brokerages have had a chance to go through that analyst call, come out with their reports and views. And there are quite a few of them that have upgraded the stock. But then there are the 1 or 2 bears as well. Very interesting move on ABB India in the last 48 hours. Vamakshi, tell us more. The bulls versus the bears.
Well, absolutely. We're seeing some very strong follow-on buying for ABB India after the company reported a strong set of numbers. Let me quickly take you through some of the important brokerages. We have on the positive side a note coming in from Jefferies. They've maintained a buy rating on ABB India and hiked the target price to 6,115 rupees per share. Now, they have highlighted that the EBITDA was lower than expectations given the miss on revenues. However, in their opinion, the order flows were up nearly 35% on a year-on-year basis, which in turn lends very good revenue visibility. Renewables has been highlighted as a high growth area, and also they believe that the operating leverage will start playing out for this counter, and this in turn would lead to double-digit execution growth. So positive note coming out there from Jefferies, but we also have another one coming out from Nuvama and from Nomura rather, and they see ABB as a perfect trifecta of automation, electrification and premiumization. They also believe that the margin trajectory of nearly 14 to 14.5% appears sustainable going ahead. They've resumed coverage on this counter with a buy rating, target price of 5,740. This target price implies a price to earnings multiple of nearly 64 times, which is higher than their 10-year average of nearly 61 times. But they believe that the uptick in the ROIC, dividend payout and strong free cash flows justify the premium multiple. While on the other hand, we have another brokerage note that came in from Kotak, and they appear to be quite bearish on the stock. They believe that the inline EBITDA masks the weakness in execution execution and the strength in margin. Order inflows growth remains constrained by very selective sectors that are actually firing. Margins were boosted by premiumization, higher utilization and value-based pricing, and they believe that the pace of execution going ahead could moderate, but nevertheless the margins could remain resilient. The traditional segments, particularly in their opinion, are not yet contributing to the growth and remain the key growth kicker. They've increased their estimates, they've revised their target price from 4,200 to 4,600, but nevertheless they still have a reduced rating on ABB India.
Okay, thank you very much for that. ABB India in the last 2 days, yesterday and today, post numbers, has nearly added on close to about 1,000 rupees. The stock price was at 4,500 and now it's come to about 5,400. Going very, very strong. Good volumes too. Deven Choksi, MD at DR Choksi FinServe, is with us on the show. Deven, strong numbers play on electrification, premiumization, automation, but the stock has done well, 70% in the last 1 year. And as Nomura points out, it's trading at valuations higher than the long-term average of 61 times forward multiple. So from here on, is the stock still attractive?
So, good afternoon, Diva. Well, I think my take would be as under. On one side, you have conventional sectors, which are your user industry, which places maximum number of orders, which includes oil and gas, cement, metal, commodities, etc. And on the other side, I think the new verticals, the new business sectors, I think which have started getting into the system, which is typically starting with your renewables, increase contribution into the spending by government in railways, the areas which includes, I think, the electronics and logistics included. I believe that I think this company is probably starting its long-term move from the point of view of getting significantly large amount of order intake. Never before in past, I think one has seen such a large size order book for the company in pipeline, and as a result of which, I think the confidence level is increasing. My take would be that given the strength of, I think, each and every program that the government is conducting, including, I think, the allocation of money towards renewables, I would think that I think companies like ABB would probably have relatively much sustainable performance, I think, going forward on a larger volume basis. So maybe the stock has run up in a shorter period of time. I would still think that I think in any price correction, this could be a good buy opportunity for staying in the investment portfolio for at least next 3 to 5 years.
Okay, that's ABB India. Quite a stunning move in the last 48 hours. Well, Vamakshi has had a busy day because she's also tracking another sector where there's been plenty of news in the last, I think, 12 hours since around 10 o'clock when we had the cabinet announcements coming in. Vamakshi, we're talking about sugar, of course, and this increase in the fair and remunerative price for sugarcane that came in yesterday. So it's gone up to 340 rupees per quintal of cane now, right? So just tell us what that means for companies.
Well, absolutely. Yes, there was an 8% hike in the FRP. It was earlier at 315 rupees per quintal and it has now been revised to 340 rupees per quintal. And in fact, this FRP of 340 per quintal will be paid at the sugar recovery rate of 10.25%. For each increase of recovery by 0.1%, farmers will get an additional price of nearly 3.32. So that is another additional provision that the government has made. And in fact, this rise in FRP is expected to come through from October 1st, 2024. So it will not be an immediate hike. Now, our initial assessment of this announcement was that it may not negatively impact the sugar mills that are specifically located in the state of Uttar Pradesh. And that is because the prices in that state are governed by a different pricing mechanism called SAP. And in fact, SAP in the UP market was already recently revised and the impact of that was already factored into most of these sugar counters. Nevertheless, the increase in this FRP was sentimentally negative for most of these sugar counters. But interestingly, we were joined by the management of Sri Renuka Sugars and they said that they do not believe that the FRP hike is negative for sugar companies. In fact, they are expecting the government to go ahead and increase the MSP as well as the purchase price for ethanol. So overall, the impact on the sugar companies may not be as much.
Okay, thank you very much for that. In fact, let's hear it out from one of the companies, a potentially impacted company, Sri Renuka. We chatted with Atul Chaturvedi, the executive chairman of Sri Renuka Sugars, to understand the impact. Now, he doesn't believe it to be very negative. So listen in to why he says that.
Contrary to what most of the commentators have been saying that it is negative for the sugar industry, I would go to the extent of saying that it's not negative for the sugar industry. because the sugar prices in the country had started becoming weak, because contrary to what the initial estimates were that the crop is going to be lower, the crop is turning out to be much bigger. And this announcement by the government will ensure that the price fall in the immediate would not happen. In fact, UP and Maharashtra, there's not much of a price difference, because in Maharashtra and Karnataka, if the recovery is higher than 10.25%, then it is shared between the farmer and the processor, unlike in UP. So effectively, even after taking into account the SAP and all, the price in UP and Maharashtra and Karnataka is actually more or less the same.
Devin, Mr. Chaturvedi of Sri Renuka doesn't believe it to be very negative. He says that, one, it's effective only from 1st of October. The MSP in many of the states is anyway higher than FRP. And he's quite confident that even though the sugarcane procurement price is going to go up, he believes that the sugar price itself will go up and therefore the realizations shouldn't be impacted. So what are your thoughts? How much of an impact will this have? Is this just a pre-election move?
So, yeah, maybe I think I would put it this way that the sugar year is starting from October. So as such, I think in the current financial year and I think the first half of the next financial year, no major change in the balance sheets of any of the sugar companies. Second point, which I take upon is these sugar prices are firming up, at least in the export market, to a certain extent. And maybe I think India market, we'll have to wait and see the monsoon factor. But overall, I think along with ethanol, the stability in the prices, I think would probably be seen as far as realization is concerned for most of the sugar companies would be seen in the coming first half as well as I think subsequently. In fact, I think higher contribution of ethanol could possibly, I think, neutralize some of the negative impact if at all it happens on that side. I'm not too sure about, I think in the domestic market, if the sugar prices would be increased or government would be keen to increase it, at least not before election or maybe after election, one will have to see. So overall, at this point of time, no negative impact as I see it. Maybe one will have to wait and see. Being a commodity in nature, I think one will have to wait and see every successive quarters to arrive at the impact analysis.
Okay, all right. So that is the latest on the sugar space. By the way, I just want to pull out some stocks from the defense, not the defense actually, space and defense space. Most of these companies have a play on both sides of the spectrum. But in particular, they seem to be getting excited about the other announcement that came in from the cabinet yesterday. That is 100% FDI being allowed in the space sector. Look at what MTAR is doing now, about 6% higher. Walchand Nagar is up about 5%. Apollo Microsystems is up about 5% as well. I think many of them are probably have a 5% circuit limit, so are tracking the day's circuit. Very quickly, Devin, these are very small companies typically. I mean, the revenue size is not that big, but obviously there is buzz and excitement on this 100% space FDI. It's clearly a sector that the government has identified. Would you look at any of these, mid to small cap companies?
Yes, Surbi. I think in the entire ecosystem, I think the larger OEMs to the suppliers to these OEMs, the ancillaries to these OEMs who are basically catering to the larger space companies in the environment, I would think that I think the benefit is going to be seen increasing gradually. However, not too sure about I think the market momentum at this point of time in these companies, because any business uptick I think would probably take a little longer time. And most of the companies, even though they are small, I think they are adequately priced or maybe in some cases rich price. I wouldn't name specifically those companies, but I believe that I think there is a case for some amount of moderation in the stock prices. I think markets have probably ran up much ahead of time. Maybe I think they are counting at this point of time already FY26 earning and on which the prices have been placed. So to that extent, I think discomfort would be there. But the higher comfort is largely because of the allocation of new money and including the attraction of new investment coming in through the FDI route as well. And as well as I think the PLI schemes of the government in certain areas.
Okay, all right. Stay with us, Devin. Let's move on then and let's focus actually on the electrical vehicle space. There seems to be a good deal of interest in the government's PLI scheme for manufacturing EV battery cells. Well, Parikshit joins us. He's picked up some information with Mahindra & Mahindra as well involved in that. Parikshit, take it away.
Sources telling CNBC-TV18 that the Mahindra Group is closely contemplating getting into cell manufacturing. The company, we learn, is exploring locations in 2 or 3 states for a possible cell manufacturing plant. The investment plans have not yet been finalized. Getting a PLI approval would be a major factor in the company's decision to set up a cell manufacturing unit. At this stage, the group is considering getting into cell manufacturing for captive consumption or internal use. There is a thinking that a Mahindra-owned cell manufacturing plant will greatly help the company's Born Electric program, last-mile mobility and overall EV production. The company had previously indicated in an analyst call that there is an inclination to have their own battery plant, but this needs verification of benefits. PLI incentives are important for the group from a profitability and margin point of view. A domestic cell manufacturing plant would also help the company in meeting domestic value addition criteria under the automotive PLI scheme. The company, along with 17 others like JSW, Hyundai, Reliance, L&T, Excite and Amara Raja, had participated in a pre-bid meeting held recently for the second round of the 18,100 crore ACC PLI scheme. A Mahindra Group spokesperson told CNBC-TV18 that the company is currently in the process of finalizing plans for ACC PLI and will announce details in due course. Mahindra Group has not yet applied given the deadline of April 2024, unquote.
Okay, all right. Thanks a lot for that, Parikshit. I think we'll just get a quick view coming in from Deven before we go into that break. Deven, you want to come in on this? Your view on Mahindra? There was that fear, right? Because tractor guidance was cut. But the stock from there has just done even better. Street seems to be positive on the other factors. Your take?
So fortunately, I think the lithium prices have moderated in the global market, and I think that is available now at a reasonably cost competitive levels. At the same time, the battery manufacturers, the cell manufacturers are also now putting in the new investment. Sizably, I think the investment is going to be the larger, and the payback period will start, maybe in my viewpoint, at least 2 years from now, even if I think one has completed the investment decision. So thus agree that I think many of the companies would probably get into the battery cell manufacturing. But still, I think to get the impact in the balance sheet, at least next 2 years, I think one will not be very comfortable putting any figures across. Stock prices are concerned. I think they are justifiably, I think, following the news flows. But I would probably wait for the opportunity to buy till I think we get the convincing answer on the numbers. And that is where probably we will have to wait for I think you get the opportunity for investing in portfolio.
Okay, all right. That is Mahindra & Mahindra in focus. We will take a quick break on that note, come back on the other side and have more stocks that we're focusing on. And we will also be chatting with Pashupati Advani from Global Foray, get some perspective on the market with him. Welcome back. You're with us on Closing Bell. As promised, let's get back to that big story of the day. As Nigel said, the David versus Goliath that seems to be playing out in the paint sector. Grasim has forayed into the paint business and launched the Birla Opus Paints brand today. What does this mean for the entire industry? A new entrant is taking on Goliath, that is Asian Paints. How are industry dynamics likely to play out? Is Asian Paints leadership under threat? Nigel with more.
Well, Grasim launched its paint business, which is Birla Opus, and has plans on commissioning all 6 plants in the next 15 months. Well, they have spent 60% of the 10,000 crore capex planned for the paints division. Their chairman, well, he's laid out the intention to become a profitable player and in fact cross the 10,000 crores revenues in the next 3 years of operations. This is a positive read-through actually for Grasim, as they are diversifying from their existing VSF and chemicals business, as paints helps them in reducing the seasonality and the volatility, and it's also more B2C focused. It has high growth as well as high ROCE potential, and also eases those capital allocation concerns around the fund infusion into Vodafone Idea. But does this put Asian Paints leadership under threat? That's the big question. Well, over the next 3 years, the industry itself is expected to see 25% capacity addition, of which Grasim would account for half of this capacity addition, while Asian Paints will increase its own capacity by nearly around 50%. Well, competition is expected to up the ante, as Grasim is eyeing to become the second largest player in the paints division, and also it comes in with the backing of a formidable group, so it has solid distribution as well. Other players like JSW Paints, JK Cement, you have Astral, Pidilite, all of them, they are ramping up their presence. They're also upping their ad spends as well. Finally, Asian Paints, well, they have their own set of problems, right? The revenue growth has slowed down. Their margins could remain under some pressure. This as the gross margins remain more or less flattish and ad spends could be ramped up. And finally, valuation-wise, it's not particularly cheap at around 55 times its forward earnings. Let's wait and watch if David can successfully take on Goliath. It's going to be an interesting contest between Grasim as well as Asian Paints.
Okay, Nigel, thanks very much. That's very well put. The David versus Goliath that's playing out in the paint sector. Well, let's discuss this and more with Pashupati Advani, founder of Global Foray. Pashupati, afternoon. Always a pleasure having you on the show. Thanks for joining in. You know, as Nigel was playing out the whole picture on both sides, I was just remembering, I think one battle that Asian Paints won very early on was the battle in mindshare with some iconic campaigns in terms of Har Ghar Kuch Kehta and whatnot. The paint sector hasn't seen this kind of disruption in the last many years. What are your thoughts? What will emerge? And in the meantime, what should investors do?
Well, obviously, everyone who's in the paint space has realized that the space is going to gap up a lot and be a lot more demand. And the challenge with Asian Paints is it can only go down from being number one. It'll stay number one for as long as possible and then go down. What is interesting is the seriousness and the money, the checkbooks of the players that are competing, like, for example, as you mentioned, Pidilite and now Grasim. They're here to stay. Both of them have complementary products. So I think they're there. But the great thing is, there's also, consolidation in the industry. There's also consolidation in products. And of course, more and more people are using, there's more, buildings happening and things like that. So I think it's all good for everyone. And according to me, the pie is big enough for them all.
Okay. But is it good for investors, Pashupati? That's the question, right? If there's going to be competition and pricing is going to be a key sort of lever in this war, then what about margins? For just that reason, would you be cautious on the sector in the near term?
In the near term, obviously, it depends on how these guys come in. If they're going to cut prices, then obviously there'll be some kind of a margin war. But honestly, I don't think they're going to cut prices that much because, as I said, I think the market itself is growing so much that it'll be okay. And you can't disassociate Grasim Paints from Grasim. You can't disassociate Pidilite Paints from Pidilite. So those guys are in cement or in adhesives. So you're going to continue to buy them because they're all used for household products. And Asian Paints also has come a little bit into their area. So, it's going to be lots of people selling the same things. They're just trying to make it easier to get to the customer. I think that's the only thing. And whoever wins that battle wins the war.
All right. Hi, Pashupati. Good afternoon and good to see you.
Nigel.
Between the two, but which one would you buy? Or do you believe, as you said, the pie is big enough for both of them? So you believe both will flourish?
Smart investors don't look to nuances. They just buy, either on market cap basis or something like that. They just buy them all because the sector is going to grow. Okay, so if you don't take number one in the sector and you end up with number two, you'll make 5% less. But the sector is right, you'll make the good money. So I think this sector is good. I would even call it, sexy, if you want to call that, if I'm allowed to make that word on television. And I think that, all these big boys will flourish in the sector.
Interesting. All right. Mr. Advani, the other question that we normally ask you about is about Paytm. I recall you were a buyer at around 500, 550, 600, and then I think you sold some at around 850, 900. So that worked perfect for you. And you said, if I can get it at lower levels, it'll be quite interesting. Now you're getting it at much lower levels, though there have been plenty that has changed. At around this 400 rupee mark, is Mr. Pashupati Advani interested in Paytm or not?
No, so Nigel, I decided to be a little brave and I bought it on the third lower circuit at 438. So that I'm now long and wrong $50 higher than the market today. But I think that they are getting their act together. I think this particular company is almost like a too big to fail because there are 3 crore FASTags. Can you imagine if the FASTags stop working? So, I mean, you've got those kinds of things that have to be dealt. And there's no provision in the FASTag software to just take the number and port the number of the tag to a new bank. So they're saying, get a new FASTag. Why would we waste all those resources when all it takes is to port the numbers onto somewhere else? Or have the wallet at Paytm only be allowed for FASTag? I mean, something like that, if they do, then, it takes the pain away from the consumer. And I think that's what it's all about. It's about taking the pain away from the consumer. So I think, according to me, yeah, sure, they're losing their banking. They're not going to be able to get the money that finance companies get. But, I think at this point in the game, that's not a bad thing because there's a lot of risk in people who are taking loans of 20, 30, 10,000, 15,000. And there's a lot of people in that space who are not paying it back. So I think by being one step away from the market, it might actually gain. I've seen a couple of reports that say that after you take away the payments gateway, the valuation should be around 400 rupees, which is where we are. So, I think we should get, I'm quite comfortable getting back in, probably going to add to the position at these levels and see what happens.
That's a big call. 430, right? You got in at 438. 438.
438. That it was a lower circuit 20, 20 and 10. So the third lower circuit, I said, bus. So it was 430.
Amazing.
So,
now that's a Braveheart move, and I'm sure we're going to remember it and talk more about it, guys. I'm just remembering from this conversation. He said FASTag and wallet. I have bigger issues at hand right now. I don't know if my FASTag is going to work, so I need to do something about it before the 29th for Dreamer.
All right, Pashupati, what about ABB? Now, ABB has stolen the spotlight over the last 2 days. Very strong numbers, great momentum. But can you go out and buy right now, even if you have, say, a 2 or 3 year time horizon? Are you comfortable, or will you wait for lower levels?
So I actually don't follow that company too well, but I'm a little wary of buying high multiple multinationals. So I am wary of that. I did see a rumor in some stock chart that says that Whirlpool may be coming to sell shares in the market. That's a strategy that I'm seeing some companies look at, where they're divesting to get money overseas because the multiples are high. So why would that not happen with an ABB, for example? So let's see. I mean, as I said, I am personally not interested in buying high multiple MNCs. That's my thought.
Okay. Speaking of MNCs, I just want to go back to the Aditya Birla Group for one to get your thoughts on what they're doing with Hindalco. And Nigel explained it really well to us, because it seems now they want to go and list Novelis, and it's the parent selling shares, but we don't know how many shares, we don't know how much money they're looking to raise, and more importantly, we don't know what they want to do with that money. So that's one aspect, and then there is, the overall metal cycle and what's happening with it. Any interest here, any thoughts here?
Well, what they're going to do with the money is maybe use it in the paint business. Who knows? No, I'm saying that's a very...
we hope not, right? Pashupati, we hope not, because, Nigel pointed out one of the biggest red flags and fears yesterday, I think it was day before when the news came, the worry that if it indirectly in some format goes to Vodafone Idea. So hope not. Neither Vodafone Idea nor Paints for that matter, right? It's hygiene, it's corporate governance hygiene, no?
Well, I think there are. This is a very astute financial group. It's one of the biggest in the country, and they are quietly doing things. Vodafone Idea is a place where money is needed. So whether it's going to, but then there's no conclusion yet. So I mean, there are three overhangs that Vodafone Idea has. One is the fact that they have not decided on that AGR. The second is they've not decided on whether the original transaction where Vodafone bought it from Hutchinson, whether that is going to attract tax on a retrospective basis. And the third is what's happening with the government stock of Vodafone Idea at 10, where they have like 25-30% of the company, where they actually converted debt into equity. At that time, the stock was below par. Maybe there's something brewing in that whole, should I say, pot. And, maybe they do need the money for that. But in any case, while metals are doing well, they had obviously leveraged to buy Novelis. They're probably paying down their leverage overseas on that and, getting some cash in, because I think there will be interesting assets up for sale, certainly in the developed world. Maybe not so, India people are asking for very high prices, but in the developed world, there'll be assets that are going to be coming cheap. And I think the Aditya Birla Group is looking at that and positioning themselves properly.
Okay, thank you for that. The world leaders and business honchos from across the world are also jet-setting to Jamnagar for the pre-wedding celebration of Anand Ambani and Radhika Merchant. Pre-wedding celebrations are set to be held in Jamnagar in early March, while the wedding has been scheduled for the 12th of July. The attendees at the pre-wedding bash include Meta's Mark Zuckerberg, Microsoft founder Bill Gates, Walt Disney CEO Bob Iger, and legendary investors Ray Dalio and Howard Marks will also be attending, along with BlackRock chairman Larry Fink. Other attendees include James Murdoch of Lupa Systems, General Atlantic's Bill Ford, while Ajit Jain of Berkshire Hathaway and Morgan Stanley CEO Ted Pick will also be attending the event. Abu Dhabi National Oil Company CEO Sultan Ahmed Al Jaber is also on the attendees list.
What a massive recovery we have seen over here. You talk it expiry related or whatever, but it's a big recovery. The Nifty bang, the Nifty's recovery is more than 300 points from the low point of the day. That's telling you the kind of recovery that we've had. Let's get a Nimesh. He'll have some idea. Nimesh, we were mentioning earlier that bulk of the short covering has taken place. Does this look like there is some big FI buying, or at least the FI flows could have turned positive, Nimesh?
So there is FI buying. So in fact, it is part of my list as well that there is a small market at close basket buying as well at a leading FI desk. Maybe that explains the last 30 minutes of move in the large cap stocks today. And overall as well, the FI seems to be net buyers in today's market. So that's overall feedback. As you rightly pointed out, a very sharp recovery from the intraday lows. And a lot of large cap names, including financials, are contributing to the bulls to have such a sharp rally. As I said, the FIs are net buyers in today's market. In fact, interestingly, I understand there is there is a basket buying in the pharma stocks at leading FI desk. So entire pharma basket has been bought by some larger FIs today. So that's the additional feedback as far as flows are concerned. Looks like because of the weekly expiries as well, you've seen a bit of volatility in today's market. But even if you look at the broader markets, there's been a very sharp recovery, and a lot of the broader market have seen a bit of recovery in the select PSU names as well. And that's where some bit of interest seems to be back, right? While the OMC stocks are still under pressure, some bit of metal names and some bit of other PSU stocks have seen some bit of recovery as well on back of buying interest. But broadly, the FIs are positive. And of course, there is a basket buying in pharma names as well, is the general sense that I'm getting from a flow point of view.
Okay, interesting. What about stocks? What are the ones that have cropped in your can today?
Well, Rima, so in terms of individual names, the first stock in my list is Marico. That's been consolidating a very narrow range. But interestingly, for the last couple of days, there is a lot of delivery-based buying happening in this particular stock. That's the case with today as well. So looks like something is round the corner in Marico. So purely from a flow perspective, this is one stock to watch out for. The second name is Concor. Within the PSU names, this is one stock which is well bid by the larger FI. So again, expect high delivery volumes in Concor, and looks like some bit of institutional interest is back in this particular name. The third name is Thermax. While everybody's talking about Cummins and ABB doing very good in trade today, but Thermax is one stock which is there is a lot of bid interest from larger institutions in Thermax. So that stands out for me. And the last is ICICI Lombard. We've been seeing this trend of lot of large blocks happening throughout this week, and now I'm expecting a large block in ICICI Lombard as well. So the stock has been in a range, but expect a large block in ICICI Lombard very soon.
Okay, got that. Thank you, Nimesh, very much for that. Indeed, what a move in the market. By the way, yesterday's intraday high, we hit the fresh all-time high yesterday, and then the market had turned down. That was 22,249. And today's move has anyway taken the Nifty back above 22,200, and it's been a massive move in the last 1 hour. We have Nagaraj Shetty back with us. Nagaraj, this has been a big bull charge in the last 45 odd minutes. What's the advice now, and any fresh strategies?
Hi, Surabhi, rightly said. I was expecting actually Nifty to reach to new highs in the next short term. In fact, it looks like today it may reach even all-time high around 22,250. The short-term trend remains intact. I would suggest to do a BTST for index as well for Mac Nifty. For Nifty, I'm expecting more upside to come. Once Nifty moves above 22,250 levels, the next set of upside target for the Nifty could be around 22,500 to 600, where important 1.618 Fibonacci extension would comes in. So that is going to be my target, and Nifty is likely to move up to that. So it would be a BTST for Nifty as well as the discussed stock data patterns, and Hindustan Copper are still at their levels. Data pattern has moved up a little bit. One can continue with the BTST for these two stocks for the upside target of around 2330 for data patterns and 278 as mentioned in Hindustan Copper as well.
Today, by the way, we got in kissing distance of our all-time high levels. So 22,234 was the intraday high, while the all-time high was 22,249. So about 15 points away from scaling that level. Look at that sharp intraday recovery. But let's talk about some more stocks. Paytm is in focus as there has been some changes in the shareholding pattern by institutions. Abhishek joins in with the details. Abhishek.
Well, the latest data which is available on January end shows that there are new entrants into Paytm in January. So, Baroda, PNB Paribas, Franklin Templeton MF, JM MF, as well as Mirai MF, Motilal Oswal Mutual Fund, Navi Mutual Fund, Nippon India Mutual Fund, as well as UTI Mutual Fund are some of the new entrants who have taken, holding in Paytm. There has been complete exit as well. HSBC Mutual Fund as well as Quant Mutual Fund have made a complete exit. Those who have increased their holding in January include the name of Mirai Mutual Fund under another FM, that is under another fund manager. Motilal Oswal MF, that another fund manager has increased the holding. Union MF, Mahindra Manulife MF, Franklin Templeton, SBI MF, and small holding increase seen for the likes of Zerodha, Bandhan Mutual Fund, ICICI Pru Mutual Fund, HDFC Mutual Fund, Grove Mutual Fund, Aditya Birla SL Mutual Fund, and Edelweiss MF. Some of them who have reduced their holding include the like of Kotak Mahindra, Kotak Mutual Fund. Back to you.
Okay, all right, got that. Thanks very much, Abhishek, for those details over there. It is now time to shine the spotlight on the backbone of our economy, a celebration of your impact on India's success story. CNBC-TV18 and HSBC India proudly present India's biggest SME awards platform, honoring the small and medium enterprises that drive our nation's growth. Nominations are now open, and we invite you to become an SME champion. Your dreams power India's progress, and it's time to celebrate them. Scan the QR code now and be part of this monumental recognition at the SME Champion Awards. It's not just a platform, but an opportunity for you to step into the limelight.
The Nifty is at a fresh all-time high, and that should come up for you on the screen. The Nifty is spiking up. We're building onto the gains, and remember, it's weekly expiry. So once we got past that 22,200 odd, from there the Nifty did a quick fire 50 points. That's because there was a lot of writing yesterday added on the 22,100 call as well as the 22,200 calls. So those call writers, they are running for cover today. They were very, very confident yesterday when they were writing calls yesterday. The premium had come down by a fifth. So they would be sitting pretty thinking that this expiry belongs to us. But that's the way expiries play out, right? It's turned on its head, and now the bulls are in control. The bears are running for cover as the Nifty is scaling new highs. Let's get in Amrish Balika. Amrish, what a fantastic move we have seen. I want to ask you about one of those heavyweights that has come back, and the so-called smoking hot stock, ITC, went to 500 rupees. There was that plan with regard to the hotel business that was announced. It corrected to 400, but today it's bouncing back. What's your view at around 410 rupees?
Good afternoon, Nigel. ITC, again, I recommended this at about 200, 220 levels about, I think, 18 months back. And now, again, I'm recommending it now because we've seen a very decent correction, and I see a lot of value because anyway, it's a leader in cigarettes business, which is a cash cow. But the focus is on non-cigarettes portfolio, and they've also become leaders in those other segments too. And like last couple of years, we've seen that they're growing through acquisitions. And today there's a talk of Pratap Snacks, though it's yet unconfirmed. But then this could actually add a new line of FMCG business for them. Overall, if you look at the FMCG business, it's performed well in Q3 despite the overall slowdown. If you look at Ashirwad Atta, it's about 30% market share. AP Noodles is number 2. Premium cream biscuits, they have about 22% market share. So similarly, they have quite a few other brands which are number 2 to number 4 in the list. If you look at the hotel business, strong ARR growth along with the rest of the sector, occupancies too have improved quite a lot. And this business is getting demerged. Like most of the regulatory approvals are in place for the demerger. So this would be positive for the shareholders because they also get shares in a certain ratio. Look at the paper and paper board packaging business. There was a slowdown because of China dumping. But again, I'm expecting an improvement out here over the next 2 or 3 quarters. Agri-business was also dull last quarter because of the trade restrictions on commodities. But I think that's temporary, should improve from here. The stock has been under pressure in the last couple of weeks because of the parent BAT's proposal to sell 4%. But then again, we all know it would be a block trade and maybe at a small discount. But once this is done, I think that overhang also will be out of the way. And even at these levels, the dividend yield works out to about 4%. But looking at FY26 EPS of 21, I'm having a target price of 525.
Okay, 525 on ITC. By the way, some interesting movers in the mid-cap market. Yes Bank is up almost 7%. And Jio Financial Services is up about 4.5%. RBL Bank is up about 3%. And South Indian Bank, anyway, the one that's doing a rights issue, is up nearly 10%. So lots of BFSI names beyond the Nifty, which are having a pretty good session today. Amrish, hi. Afternoon. Good to have you on the show. Any interest, any thoughts on any of these 4 names that I mentioned? Financials beyond the Nifty?
See, financials, if you look at the Jio chart and look at the Paytm chart, I think you'll see a clear cross, because the day Paytm's issue started, I think we've seen Jio Financial moving up and Paytm was cracking. So Jio Financial, even at these levels, I think it's a decent buy, can still move further from here. In fact, I have a long-term target of about 380 for Jio Financial.
Okay, all right. Just one more point, since we're talking about the Birla Group, just some comments that are coming in there. Mangalam's at the press conference, and besides the roadmap that he's laid for Grasim, he's also said that they're looking for a partner for Vodafone Idea. The stock has spiked up. The stock assets is holding with gains, I think, are around 5% approximately. But Vodafone Idea as well, that's the other stock that could be in focus. We need to hear something concrete about that. But for the time being, Mr. K.M. Birla is talking about looking for a partner to Vodafone Idea. So that search continues for some funds and ensure that there is some survival out there. Explains why that stock has moved to the high point of the day. Amrish, I wanted to ask you, what's your take? Vodafone Idea, whether it will survive or not. And then, in the same breath, I could ask you about Industars, because if Vodafone, survives, then would you rather play it from that way, or would you look at Industars?
No, because see, if they're getting a partner for Vodafone Idea, because clearly, I mean, that requires a decent amount of fund infusion, and that is what was missing. If that comes in, I suppose Vodafone Idea should come back on track, and because of that, Indus Towers should do well. But then I think you'll get a much better return on Vodafone Idea if whatever we are talking about now comes true.
Okay. Some more stocks in the broader universe where we are seeing some big moves. Graphite India is 12.5% higher. There was a Jefferies note on it, and the stock has surged. HEG will also come up for you on your screen. You also have Samhi Hotels, which has made a big up move on pretty good volume. Tourism Finance is a stock which is also higher in trade. In the hotel space, which is your preferred hotel name, particularly on the mid-cap end? Not Indian hotels, I know you've spoken about it in the past, but you've got a Sami Hotels, now you've got a recent listing like Park Hotels. Is there anything else that you like?
No, I mean, again, the Indian Hotels, in fact, has touched the target, which I had given quite some time back. So that target has been achieved. Leaving that aside, I suppose Sami Hotels should, in fact, do still better. I think the momentum, has been there for a while now. We could actually see either 15 to 20% move from here.
Okay. All right. Let's just quickly start recapping what has been a super, super strong day of trade, where the Nifty not only reclaimed a lot of the damage that was done yesterday, it went on to hit a fresh all-time high, 1 point higher, but 22,250 for what it is worth. And that charge came in from IT stocks, it came in from the auto space in the large cap arena. Bajaj Auto is in pole position as we're closing off 3.5% higher. Eicher Motors up and about. If you're talking IT, then HCL Tech, Tech Mahindra, TCS, Wipro, even Infosys, all of these stocks are up anywhere between 1% to about 3%. Move beyond auto and IT, then we had ITC chipping in. We had something like Reliance moving higher as well. Last time I checked, about 1% higher on Reliance. And ICICI Bank, interestingly, was a breakaway trend from the rest of the banking space. ICICI Bank up 1%. But other banks had a bit of a struggling session today. So Indices down about 2%, HDFC Bank down about 1.5%, and Kotak was also down. But barring some of these large cap names, it was largely a very green-looking screen on the Nifty.
Indeed, the Nifty IT index up close to about 2%, where the gains were led by HCL Tech, Tech Mahindra, and TCS. These are stocks with an up move of about 2 to 3%. In the auto pack, that was the second best performing sectoral index today, the Nifty Auto. And here you had Bajaj Auto and Eicher Motors. These stocks were under pressure about 2 days back when the Vahan data for the early part of February came out. But today you are seeing a lot of buying. Coal India has rallied 10% in the month of February. ITC was a big mover in the last 1 hour. And you also had L&T gaining close to about 2%. Very few, spaces of, red perhaps. But, it's the mid-cap, which was the, shining star today.
Absolutely. Coal India, well, that one has seen a big rally, but it's also corrected 10% from the top. You have Hindustan Copper that bounced back, that was up close to 7%. You had Vodafone Idea, there is hope. Maybe Kumar Mangalam Birla says that they're scouting for a partner out there and they're looking, to see what they can do with that business. So that stock goes home with gains of close to around 7% approximately. On the flip side, you had Strides that was under some pressure, JSPL as well that was under some pressure, and you had IOC as well that was on between 1 to around 2%. But to sum things up, it was a rocking trading session. The bulls came back, and in fact, they knocked out the bears in today's trading session. The real action, though, was in the broader markets, and consistently all through the session, you saw relative outperformance coming in from the mid and the small cap space. That's on that note, we'll wrap up on this edition of Closing Bell. Markets Forward comes up next.